So we're going to be talking about institutional investors in crypto. Can't get enough of crypto in here, I know. So the first question I want to ask you guys is, late last year when crypto prices were running up to 20 grand or whatever they actually ended up peaking at, everyone that I was interviewing was telling me there's this huge wave of institutional money that's about to dive into crypto. You know, it's about to happen. It could happen tomorrow. And now that prices are down closer to around 6,500, I think we started to realize that it might be taking a little bit longer than some people had maybe anticipated. So my first question is, I mean, what do institutional investors really need to see? What are the top couple of things that are really going to sort of push them overboard? And is there actually that much money, that much institutional money still waiting on the sidelines, or has it, you know, looked into investing in something else?
Good question. I think there are a couple of factors that are leading to institutions, the challenges for institutions to adopt crypto. I think some of them are, most notably, regulatory ambiguity. I think we all have, you know, a finite amount of resources. To allocate resources to a project where you don't have regulatory clarity is a bit of a challenge in this market. And I think also other panels have talked a little bit about this, but the lack of institutional products. So we look at other asset classes that have really strong infrastructure, whether it's matching engine technology or custody solutions. Those rails, those bridges that exist between traditional finance and crypto are actually being built right now. So I think there's an infrastructure challenge, but I also think that one of the major obstacles is regulatory ambiguity.
Mm-hmm. I guess thinking about late last year, I think one of the reasons there was this sense that, okay, institutions are going to move in, is because of the Bitcoin futures. They were launched in mid-December, right around the time Bitcoin peaked. So that was sort of a sell on the news event. Since that, now that was for cash delivery. So from our point of view, that was not the real deal. Physical delivery will be the real deal, and backed. So Intercontinental Exchange announced that it is launching backed. This week, actually, Adam White from GDAX, he was the head of GDAX, and I think number 5 employee, whom we both admired tremendously. We did a white paper with him in our early days in 2015 called Bitcoin Ringing the Bell for a New Asset Class. So to see him move to this exchange, and you know, in the exchange world, winner takes most. That was a very significant move. So the other thing that we saw yesterday was Fidelity's announcement, and that was very important from a custody point of view. You asked what needs to happen. Well, they're willing to provide the entire stack for hedge funds and institutions, not individuals yet. That is really important. That's probably the most important thing that's happened in the last few months.
Mm-hmm. Yeah, the Fidelity news, I was going to ask you guys about that. I mean, that's a pretty big deal. It's a pretty big institutional player getting into the space. They announced yesterday that they're going to move into crypto and do stuff with crypto custody. What does that mean for all of your businesses? But I guess I'm most interested in yours, because is it a threat to Coinbase?
Well, no, we don't view it as a threat. We just view the ecosystem as potentially getting, much, much larger. So we're really supportive of Adam taking on challenges at Backed. I think that it's very supportive of the institutional business to see someone that's helped to build a business like Coinbase forge new grounds with a traditional player. That really says that crypto is not only here to stay, but it's an institutional product. And we read the Fidelity news and said, great, that's fantastic. We need more custodians. We need custodial capacity. We operate a custody business as well at Coinbase. I think we bring something to the table that Fidelity does not have. We can't compete with them from a balance sheet perspective, or maybe the reporting and some of the institutional elements that they bring, but we are a crypto-first company. We're the kind of company that will get crypto-first features built into a custody product probably first. So our clients look more like Joey, then perhaps a larger hedge fund complex.
And we're looking at it also saying, this is great.
It's huge.
Because crypto
It's huge.
first and traditional, really an ecosystem working together. This is the only way it's going to happen.
Absolutely.
Yeah.
I would say one thing I would say is I think all this institutional movement into this space is great, and it will enable institutions to be able to buy these assets. But I don't think it's actually what's going to trigger the influx of institutional money that everyone's talking about, because these things are kind of checkboxes. You have to have a really good regulated custodian.
Correct.
You have to have great exchange infrastructure where you can do things like, do HFT and not have, 1 second latency, which a lot of crypto exchanges, believe it or not, have. But I think the big thing actually holding the space back is adoption of real world use cases. I think that's what will help drive the kind of next bull run in this market is scalability and easier fiat on-ramps, enabling people to actually use applications, which then causes institutions to buy because they see this tech actually being used in the real world.
Do you think we will find those use cases here in the US, or do you think it will primarily be in other countries?
I think they'll be global.
I think probably the first use case, Bitcoin comes to mind. It's what we've had the most exposure to. And there is a store of value role for Bitcoin. That would be a starting point, I think. Just, test the waters this way, digital gold, try it out. I think, I don't think it's going to be a swoosh, but I think it's going to be feeling our way in. We did it through GBTC. That is the only way we could do it. It was a security.
It's the Bitcoin Investment Trust.
Yes, it's the Bitcoin Investment Trust. It trades over the counter as GBTC. And was the only way the regulators will let us, a 40 Act fund, gain exposure to Bitcoin.
Now, did you sell off holdings in GBTC?
Yes, we did. We sold in December and January. We didn't eliminate. We have very high conviction in Bitcoin. Actually, our conviction has increased during this downturn because unlike last year where it seemed like the primary role for Bitcoin would be store of value, and with that declining velocity, which we don't think would be great for the security of the system, although there's some debate about that. What you saw in this correction is Bitcoin's share of the crypto asset network value, so the more than 2,000, the value of the more than 2,000 crypto assets, went from the low 30% share to the high 50% share, which felt to us like, okay, Bitcoin may be showing itself as the reserve currency of the crypto asset ecosystem. That's huge. The velocity associated with a reserve currency, anyone who trades the dollar knows this, is very high. So a very nice antidote to the store of value.
So you have sold off GBTC. Is there a point is there something you're waiting for to buy back in?
So I'll explain that what I'm about to explain is a little esoteric, but maybe you should know about this if you're investing in GBTC. In a 40 Act fund, it generates unqualified income. Unqualified income can account for no more than 10% of gross profits in a 40 Act fund, so a mutual fund or an ETF. If it does account for more than 10% of gross profits, the IRS takes all of the rest of the profits away. Yeah. So, we learned that because of the forking. We had not taken any profits, but we had to take the forks in cash because a grant or a trust cannot be diversified, could not own more than Bitcoin. So that was quite problematic. Okay. Thank God we did have a big year last year, so it was not more than 10% of our profits. But we have to be very careful with this instrument now.
So I have to ask all of you, we're in a crypto bear market right now. How has this impacted your businesses? And don't say it hasn't, because I know it has to some extent. Even if it means just changing, the focus of what you guys are doing.
So we're using this as an opportunity to continue to build. So we haven't backed off of our strategy at all in terms of building bridges between traditional finance and crypto. We continue to serve the crypto first community, whether they're an individual investor, an active trader, or an institution. So we're really focusing on continuing to deliver product within this environment. And quite honestly, I think there's so much to build. We could be building for years in a bear market without.
Are there new areas that new growth areas for you guys that you're looking at, like OTC trading?
So constantly. So we, one of the tacks that we actually made, we noticed that the growth of OTC trading was pretty impressive. And while we had intentions of building OTC, we actually kind of fast-tracked that. So we'll most likely be launching our OTC product next week. And we're looking forward to offering that to clients as well. So we found that OTC was becoming a de facto on-ramp to some institutions as well. So,
what about you, Joey?
For us, I mean, the main thing it's affected is we've seen a huge increase in people interested in investing in venture capital as opposed to the underlying cryptocurrencies, and that's because investors kind of do the opposite of what actually makes rational sense. When the market's down a lot, you should actually buy the assets that you believe are cheap. But instead, we've seen an influx of people investing in equity because people have this perception that private equity is a safer asset class than publicly traded ones. But in reality, it's just not marked to market every day. So it feels a lot safer. But investing in early stage startups is still super risky.
Yeah.
Yeah, there are a couple of articles out in the last few weeks. One was Andreessen Horowitz, and the other one was Pierre Rochard. And there's a debate going on. Should institutional investors move towards the venture capital or the underlyings? A little bit to your point. So I would recommend that highly. There's a big debate going on right now about that.
Yeah.
And the underlying Bitcoin seems to be, in my mind, as I was reading those, it seems to be right now that's where you would want to go, to your point, as opposed to VC right now. We don't know these native currencies. We don't know what the velocity. You have to be a student of economic policy and monetary policy. We don't know what the velocity of some of these native currencies associated with these digital service projects is going to be. It could be infinite, and everything could back up into Bitcoin as the reserve currency. So that's something really to work to think about and work through. Can I just, Connor put up a chart, I don't know if he can hear me, but I just wanted to show everyone what traders are looking at. This is the professional traders are, I think, have a hold on the Bitcoin market right now, and so you see it's held 6,000, 6,000, 6,000. It hasn't moved up on some of this very good news coming into the ecosystem, but it hasn't broken down either. So I think he's going to go back to it in a second. Yeah. There it is. So
it's not showing up for the.
Oh, it isn't.
Oh, yeah, it is.
Okay, you can see. So you can see the. Well, first of all, the arrow there is where we got in, and I'm pointing to it because you see it was on the yellow line. It was testing that 200-week moving average. So the 200-week moving average. Today, that 200-week moving average would be at 3,000. The 100 is approaching 6,000, and it looks to be holding there, and we seem to be getting more and more good news. So, we were post-Mt. Gox that really got us down into the 200-week moving average. The only reason I mention this, we're not technicians, but I know that professional traders, a lot of them from hedge funds, global macro traders are trading this thing, and it just looks like it wants to hold 6,000 for right now.
Yeah.
However, if it broke, what they would do is take it right to 3,000, just so you know.
Good to know. I want to shift gears a little bit. I have to bring up regulation because it's something that comes up in the crypto world all the time. How have your conversations with regulators shifted, if at all, in the last 6 months or so? What kinds of questions are you hearing regulators ask?
I think regulators are incredibly well informed, actually, about this asset class. I think they've been doing a great job of studying both the asset class and the assets and the marketplace. I think, look, we would love for some definitive language around custody. We would love for some definitive language around, what's a security, just so that we have greater swim lanes. I think I do think that we hear rumors all the time that there will be enforcement actions. We haven't seen anything just yet, but I expect, I expect to see the regulatory environment continue to evolve, both with participants like ours. Look, we are not only active in front of them as a participant, but also endeavoring to represent our clients and also the whole ecosystem as well. So.
Yeah, I haven't seen. It's like if you look at what the SEC is doing with ICOs, that was a huge topic last year. I think at this point, the kind of conclusion that I've came to is that we're unlikely to see super specific guidance about whether something is or isn't a security. Instead, you're much more likely to be pointed to, well, there's the Howey test, there's the Supreme Court case, you should check that out. Is much more likely what a regulator would say to you.
Kind of the SEC style.
Yeah. We might see more speeches, kind of like the Hinman speech, and there's a couple other ones where people kind of almost off the record say something that's not, official SEC policy. I think that's how things will continue there.
Mm-hmm. One of the things that I've seen is depending on the audience in public speeches, there is a little bit of a shift. If someone's addressing an equity crowd, they'll kind of dial back the positive Bitcoin or crypto talk. If they're in a more general audience, then you might see more positive. So they're kind of shifting the tone based on the audience as well.
I guess I just listening to Christian and Carlo say do no harm, think about this like the early days of the internet. I think we're hearing more of that because our regulators are seeing other regulatory regimes which are a little more lenient, and actually there are some funds in Europe that don't want Americans in their funds because of the regulatory uncertainties. And so I think they've become a little more sensitized to that. On the other hand, we've been involved with a regulator in another country, and this regulator said, we're going to be, we want to be ahead of the game, we want to be a leader. And what we've learned is, now that they see how much homework the SEC and others are doing, they're going to wait and see what the SEC does. So there's a little bit of a dance going on there.
I also have to ask about ETFs, obviously. I mean, the SEC has yet to approve a Bitcoin ETF. It's what everyone in the crypto world is talking about. When is this going to happen? There have been a lot of different proposals for a Bitcoin ETF. Some have been based on the Bitcoin futures contracts. Others have been based on the actual physical Bitcoins. What do you think is the best way, the best format for a crypto ETF to sort of make its debut in? And what do you think is the most likely format that regulators would approve?
They've set a bar, and the bar is pretty high. Being the surveillance and the market manipulation, we're talking about a decentralized ecosystem. That's a pretty big lift for almost anyone to kind of get to. So unless someone can actually get to that place, we're still going to face challenges in terms of launching an appropriate.
Are we going to see one in the next 5 years?
Oh, 5 years probably. Anything can happen, right? I mean, but it's a right now there are substantial obstacles in meeting that meeting the bar.
Mm-hmm. Yeah. Sorry. Go ahead.
I was just going to say I think we'll see a lot more trading of the underlying in futures and things on top, derivatives on top, for quite a while before we see an actual ETF that a retail investor could buy.
Yeah, and our COO, who focuses more on this than I do, he doesn't think we will see one for a couple of years. Maybe we'll see some kind of closed-end fund first, and it may not be in this country. But all of these are going to be good tests of the plumbing, and that's important. I think everyone's feeling their way in.